Nvidia share price has risen by 227% year to date. It's currently one of the hottest stocks on the market right now. Why so? Nvidia's AI business has actually jumped 141% in second quarter 2024. Nvidia is now clearly a leader in terms of chip making, overtaking Intel and AMD. If you see in this chart, you realize that its dominance is just going to accelerate in the years ahead. That is why Nvidia is right now valued as the 6th most valuable company in the world, crossing the 1 trillion market cap. So the $1 million question, is Nvidia still a buy today? What do you need to know before you get invested? If you are curious, continue watching on. Hi guys, welcome back. Right now, AI is the flavor of the season. Tesla saw a share price jump because of Dojo supercomputer just yesterday. I find it weird that supercomputer cutting edge stuff can be created so easily. But let's talk about our subject for today. Let's look at what Nvidia has actually been through. Back a year ago, you realized that Nvidia's share price has been punished by Mr. Market, correct? For that span of 1 year, it lost more than 65%. So what exactly causes a share price to collapse? A key reason? A decline in earnings. Even if the company still remains profitable, a decline in earnings is terrible news to Mr. Market. And that's also why you see the REIT share prices have been collapsing in the last 1 year. Mr. Market is very short-sighted, and we'll get to that in a while. But take a look at this quarterly revenue trend. What do you realize from first quarter 2023 to second quarter 2023? First quarter 2023 again is 30th April 2022 based on its accounting year. There are two main business segments for Nvidia. They produce high-end graphic processing chips to data centers as well as gaming. And for the last few years, gaming has been its main key revenue driver. The problem is this, as announced on 30th July 2022, you would see a big drop in gaming revenues, correct? That drop in revenue is at least 40%. So the question is, why did gaming revenues drop? Or why did it actually pick up just a few months before that? Some key reasons. Firstly, we're moving to a post-pandemic world whereby there's less gaming demand. Second, there's been a crash in the crypto industry, and some of its chips were actually purchased by crypto miners. Mr. Market did not care that data centers has still eked out a small growth, because all in all, the total revenues has actually dropped from $6.2 billion to $6.7 billion. In the next 2 weeks ahead after that result release, Nvidia actually lost a further 27%, dropping all the way to $140 per share. Back then, Nvidia was just a $350 billion market cap company. If we were to extrapolate that demise in gaming and imputing a compression in price earnings multiple, what we would realize is a conclusion that Nvidia's share price decline may be far from over. This article is back a year plus, and it shows that how unpredictable the future is. As always, if you'd like to read more on Seeking Alpha, I've actually a referral code in links below. Check it out to read more perspectives to make your own decision. Back to Nvidia. What actually caught everybody by surprise is the revolution of AI, artificial intelligence. AI requires high-end processing in data centers, and the consequence to it can be seen in this pie chart. Right at the bottom is 2023 results, and it clearly shows that the orange line data center has right now overtaken gaming as the biggest revenue driver for Nvidia. Looking at this alone, we have given an analyst many reasons to be optimistic about Nvidia's business, and that's why the share price started to rally up. This pie chart, however, is not the latest results. Let me show you what Nvidia actually clocked. It is most recent release on 30th July 2023. Gaming has remained relatively flat at $2+ billion in terms of revenue, sitting far below its previous peak of $3.6 billion. But what is the shining light? It's none other than data centers. What we can realize is data centers from $3.6 billion at the start of the year to $4.2 billion, and right now breaking $10 billion in revenue. That alone has pulled up the entire results base and given Nvidia its best earnings results to date. Of course, Mr. Market is very pleased. As I mentioned, Mr. Market can be very short-sighted at times, and what it has rewarded shareholders is a 227% increment year to date. But is this a bubble? And before I answer that, help me smash the like button because it's taken out hours to prepare this presentation for you. And I hope to provide you two sides of the coin to show you the bearish case as well as the bullish case. So again, do smash on like and press on subscribe, especially if you like content like this. There's actually a further bullish case I'd like to show you. Let's look at a previous shining boy, Tesla. Hindsight is always 2020, but let's draw some valuable learning points. Back at that point of time, Tesla actually cracked that 1 trillion market cap club with a 13.8 billion revenue as announced in its third quarter 2021 results, and it also had a gross margin of 30%. Net income was $1.6 billion. That was a time when Tesla was a super high growth company, but that still doesn't look at what Nvidia has actually produced. These are Nvidia's actual financial numbers. Revenue around the same 13 billion plus. Gross margin for Nvidia on the other hand is 70.1%. Wow, that in itself is mind-blowing. And even at its lows, Nvidia's gross margin at 43.5% was still very respectable. Operating expenses inched up, but that in turn resulted in a net income of $6.188 billion for second quarter 2024 alone. Compared to Tesla's $1.6 billion, it is possible to argue that Nvidia at $1 trillion is cheap. The net income growth year to year for Nvidia is 843%. Everybody's debate right now is if AI market is really as big as what news headlines are mentioning, this net income will only go up higher. Spectacular, correct? Before you go pressing a button and buying Nvidia shares right now, let me share with you some points that are worthy of bringing caution. If we were to see Nvidia's share price alone, we will think that the overall chipmaking industry is booming. This chart over here shows you that Nvidia is an exception. The rest of its competitors are languishing in terms of its 1 year share price. And the gap is not even close. This brings me to suspect this is not really a rising tide that is raising all the boats, but rather an exceptionally bidded up company that is right now in market's limelight. Analysts have mentioned that no one in the chip industry besides Nvidia sounds good. Is that true or is that not? I think it's easier to justify that competition will eventually catch up and no one company sits at the top forever. Tesla, for example, is right now facing competition from BYD. And speaking about Tesla, let's put back on what has happened in its previous run up. Drawing back to October 2021, that is actually when Tesla released its quarterly results. And looking at share price, it's quite easy to conclude that Mr. Market loved it. Back then, Tesla's quarterly profit jumped to 1.6 billion as car sales actually surged. On hindsight now, it's quite easy to see that was the point of highest growth. Anyone who bought on that run up is still now sitting on losses. You may be thinking, hey, right now quarterly revenues and profit for Tesla is higher than back then, plus news of Dojo supercomputer. Does that mean that Tesla's share price is cheap versus October 2021? Well, that's actually quite hard to answer. As what Warren Buffett has said before, in the near term, Mr. Market is a voting machine. In the long term, Mr. Market is a weighing machine. Whether Tesla is cheap right now or not depends on its long-term ability to grow revenues at this record-breaking pace. A lot of that future growth has already been priced into Tesla, and a lot of that future growth of Nvidia has also been priced into today's share price. There will always be new good news in the bull market. Tesla actually saw new orders from Hertz when it crossed its 1 trillion mark, suggesting that higher growth rates were down the road when it actually wasn't. You may in the coming weeks and months see Nvidia back a mega contract that will suggest that Nvidia's highest growth are down the years ahead. Hopefully staying right to the very end, you have now a sense of not to be too optimistic in bull markets. I would like to end with this quote by Howard Marks: investment success doesn't come from buying good things, Nvidia is definitely one of them, Tesla also, but rather buying things well. Keep this wisdom close to heart and invest safely. With that, I'll sign off from here and invite you to some of my other tutorials that may be of interest to you. Take care as always. Goodbye.